So today we're going to dig into the anatomy of a comeback. We're going to use MSTY as a case study, a company that, let's be honest, the market had pretty much left for dead. After years of radio silence, there are some new signs of life, and we're going to break down exactly how this kind of corporate reinvention actually happens.
And this quote right here, it just nails it. The biggest opportunities, they're usually not in the flashy stocks everyone's talking about. No, they're found in the quiet corners of the market, with companies so forgotten that nobody's even paying attention. That's the contrarian sweet spot, and that's exactly where MSTY's story begins.
You know, every comeback story has to start somewhere, and usually it's in what I call the forgotten phase. For MST, this was a long, cold winter. I mean, its stock chart basically flatlined. Analysts were downgrading it just because they were tired of talking about it, and the financial world just moved on. The market didn't just ignore MST, it kind of forgot it even existed.
But here's the thing. There's a huge advantage to being ignored. When you don't have the pressure of that quarterly Wall Street report card, management can finally do the real, hard work. They're free to restructure, to refocus, to innovate in silence, all while laying the foundation for what could be a massive comeback.
Okay, so if we zoom out for a sec, you'll see that most of these corporate turnarounds follow a pretty universal pattern. It's a three-stage cycle. First, you have apathy. That's when nobody cares. Then comes accumulation, where the smart, quiet money starts to notice something's up. And finally, you get ignition, which is when the story hits the mainstream and everyone else piles in.
So the big question is, where does MST fit into all this? Well, all the signs are pointing to it being right in that crucial second stage, accumulation. The quiet groundwork has been laid, but that big public aha moment, it hasn't happened yet. And that transition from apathy to accumulation, that is often the golden window of opportunity. Okay, so how do you actually spot a company that's in this sweet spot, this accumulation phase? Well, it's not about looking for splashy headlines or big announcements. It's about learning to hear the whispers of change, those really subtle clues and the first signs of life that start popping up just beneath the surface.
And these whispers, they often look a lot like this. You'll see trading volumes start to pick up, but specifically on days the stock is up. You'll hear analysts slowly change their tune from sell this thing to, well, maybe there's some cautious optimism here. And maybe most important of all, you see insiders, the people who know the company inside and out, start buying stock with their own money. I mean, that's the ultimate vote of confidence, right? They're betting on a turnaround the market hasn't priced in yet.
Now, it's not just about what's happening inside the company. You got to look at the bigger picture, the macro environment. And right now, the whole mood is shifting in MSTY's favor. The market pendulum has totally swung away from growth at any cost and is now rewarding good old-fashioned operational efficiency. With interest rates maybe peaking and AI creating new demand, a lean, disciplined company like the new MSTY is suddenly looking very attractive.
A friendly environment is great, for sure, but the real heavy lifting, that happens inside. So let's pull back the curtain and look at the actual blueprint MST's management has been using to rebuild this company from the ground up.
And you can see this massive pivot, right? From the old MYST to the new one. The whole focus has shifted. It's no longer about chasing trends or trying to get a round of applause every quarter. Now, it's all about operational efficiency, reinforcing what makes them unique, and building long-term, durable value. And that is exactly what this market is looking for right now. You know, early on in a turnaround, the numbers don't scream at you from a spreadsheet. They whisper. And that is exactly what we're seeing here. These key metrics are all quietly moving in the right direction. Customer churn is down, R&D spend is going up, but strategically, and gross margins are getting wider. Individually, none of these are going to make the front page, but you put them all together, they paint a really compelling picture of a turnaround that's actually working. But hey, we all know markets aren't just a bunch of numbers on a screen, right? They're driven by people, by psychology. And as a forgotten stock like this one starts to show these first signs of life, investors go through a very predictable emotional roller coaster. Understanding this pattern is everything if you want to see the opportunity.
And this is that classic cycle of rediscovery. It always starts with disbelief. No way, people say. Then, as more evidence piles up, it shifts to interest. And that's exactly where we are right now. The next stage? Well, that's FOMO, the fear of missing out. And that's what drives the crowd to rush in. And finally, you get rationalization, where everyone tries to convince themselves they saw it coming all along. The key takeaway here is that we're still in that early sweet spot, before the herd arrives.
So what's going to be the spark?
What could push this thing from interest into full-blown FOMO? Well, there's a whole pipeline of potential catalysts. You've got upcoming earnings where expectations are super low, so any kind of beat would be huge. There are rumors of new partnerships floating around, and management has been dropping hints about a really strong product roadmap. Any one of these could be the match that lights the fuse.
And this right here, this brings us to the whole point of this explainer. The opportunity, the real edge, it exists precisely in that gap. The gap between the improving reality of the company and the market's still skeptical perception of it. It's all about seeing today what most people will only see tomorrow.
Look, of course nothing is a sure thing. No comeback is ever guaranteed. And there are absolutely real risks here. Can management actually pull this off? What if the economy takes a nosedive? What if a bigger competitor decides to crush them? All valid concerns. But the difference this time around is that the new, leaner MSTY is just better equipped to handle these headwinds. They've got a better cost structure and a much more disciplined game plan.
And here's the classic irony of it all. If and when MCYT is rediscovered by the mainstream, you're going to see headlines calling it a surprise resurgence or an overnight success. But was it really a surprise? Not if you were paying attention. The signs, the whispers, the data points, they were all there for anyone who was willing to look where nobody else was looking.
And so we end with this question, a question that kind of reframes the whole thing. It suggests that maybe the smartest move isn't always chasing what's shiny and new, but finding a great, forgotten story that's quietly being rewritten. It leaves us to ask, what if this comeback story isn't over? What if it's just getting started?